Hey everybody, this is Brooks York. I want to welcome everybody out to the September WASDE. I actually got it right this month, Sterling. I think last month I was a month behind, but it is September, and this is the last pre-harvest WASDE report, and we got our eyes on a few big numbers. Now, what I'm most excited about, Sterling, is that Nicole Meyer, who takes care of our social media outlets, has posted a picture of me, and I think it's 5 or 6 years old, or maybe 30, I'm not sure, in a basketball jersey. And I think these NIL rules, this name, image, and likeness, applies in corporate America too. So I'm going to be taking jersey orders before this call's over, and we'll probably be retiring. You may not see me in 30 days on the WASDE report. So
Well,
I'm pretty excited about that.
I'm working on my own NIL project here.
Okay.
It's rumored that there's going to be some executives from General Mills and a few of the other packaged food companies down in Lincoln on Saturday, and they're looking for endorsements for turnovers. As you know, our football team has averaged 1 turnover a quarter in its first 2 games.
Well, we may have just lost all of our Nebraska crowd now that you threw that out there, but that's all right.
I think they recognize the reality of the situation.
Well, if you're a Colorado fan, you're probably got your attention doubled now that we threw that big win for week 2 in the commentary today.
Yeah.
So good stuff. But I think, unfortunately, Sterling, we're going to be right back here. We probably won't be able to walk away on that stipend, but it's worth a try anyway.
Absolutely. You got to show a little bit of initiative and kind of look around the corner. And don't get me started on the football thing. I could have an entire litany here, and we don't want that.
You could. Start calling college athletics, and you'll have everybody up in arms.
Oh,
well,
yeah.
We've got the last of the pre-harvest reports today, and Sterling, in our pre-season talk or our pre-session talk, we talked about some things to look out for. There are several things to look out for, and of course, all conversation tends to be around yield. And I'll kind of stop right there for a second. We also need to look at exports. And there's a couple of outliers out there. 60 days ago, there were those saying that there could be a last-minute acreage change. So let's talk about those 3 things right now. I'm going to put you on the spot. If you had to pick a number that on soybean yield, that if the number comes in today higher, it's bearish, lower, it's bullish market, on soybeans, what is that center point that we need to be looking for? What is equilibrium on beans?
50.2 should be equilibrium. That's a smidge above the survey. Anything bigger than that will be a bit of a surprise and will add a little bit to the carryout. But we have to wait this. I know we like to think about yields, but that export number is just as important. And my fear coming into this report is that yes, we're going to see lower production, lower yields, and maybe we lose 1/10 on harvested acres. By the same token, we lose something on exports.
When we get down to a certain point on carryout, and I mean pretty low, and we're pretty low, to Sterling's point, those exports mean a tremendous amount, because if we're looking at 10 to 30 million exports missing from the balance sheet or showing up on the balance sheet, it really takes us into, if they show up and we take that carry out lower, it really takes us into an unprecedented situation as far as stocks to use ratio, doesn't it, Sterling?
Yes, it does. We're doing a real good job crushing. We're doing a really good job exporting soybean meal. And, right now, the last carry out for beans was 245. Expectation is 210. I'm a little bit above that expectation. But if we see, we go from 1825 to 1850 on exports, all of a sudden, you get that ending stocks number south of about 190. That changes the wind and the sails in the market. And we now have a tight enough supply where that can induce some bullish overtones.
I hate to use this phrase because I've used it in a few meetings, and if I've used it on a WASDE in the past, I apologize. But it may take beans being the high tide that floats all boats here, because on corn we just don't have the enthusiasm or really even the possibility to trim carry out to anything close to what we're seeing in beans. Let's switch to corn here very quickly. What is that equilibrium number on corn yield as we get ready for this report to come out?
So the survey's at 173.50. I think if we see anything north of, let's say, 174.3 would be bearish. If we can get this number south of, let's say, 172.7, that will shave enough off to where I'm not looking for anything that can get bullish here. What I would like to do is
And
stop the hemorrhaging in corn.
yeah, it feels like the market is trying to do that over the last few sessions. It can't get enthusiasm, but it doesn't want to die either. And the lack of enthusiasm has to do with exports. Now, you and I have talked a lot about this, and we've continually shaved our estimates on new crop exports down to, I believe, 2.05 billion. Now, Sterling, just by looking at the world as it is today, I don't think we've got that chance of 2.05 billion. However, if you look at the situation in Ukraine, that's what maybe gives us the possibility of allowing 2.05 billion bushels to leave the country. And exports just seem sick. Tell us a little bit more about the importance of exports.
Well, exports after production are the biggest drivers of the balance sheet. Acreage is what it is. So when we look at components that drive the market, exports are just as important as yield, just as important. And some of this is going to depend on what the ideas are for Brazilian corn production next year, as that has gotten noticeably larger. Now, part of the reason we're at this 2.050 with the USDA is an absence of corn going to China. Typically, they don't come in and buy corn this time of year. That tends to be maybe more of a springtime thing. And they do have some orders on the books. But we have definitely seen a decline in Chinese purchases. In fact, we just wrapped up the marketing year, and this was our lowest year for corn exports since Brooks. Since what year?
Well, oh gosh, I'm going to have to go back to maybe 2018, 19. Is that right?
Let's try 2012.
2012. Wow.
And that is why, even though if we look at good to excellent corn conditions, they are about the worst in the last 5 years. And yet we can't get the market to bounce. It just keeps grinding into the sand here. And that's because the export number and the ideas around the export number are very low. And that is the big thing that is weighing on the market. So until we see something to change that, and there are things that can change that, the Ukraine, and if we can start to do a little bit with corn like we're doing with soybean meal and moving more into other places, the Philippines, into Europe, maybe we can offset some of those Chinese losses. But we have to look at the geopolitical situation. And right now, China's willing to have a row with Apple Computer. Okay, you're willing to take on a company that's worth more than most countries. And that just indicates how sour relations are with China. So for corn, we're probably going to be China's. We are going to sell some to them and we will export some. But remember, that's kind of a newfound thing for us. That was not something, back in 2012 we were doing. And we may very well have a situation where we are the buyer provider of last resort. And
So,
that,
Sterling, you talked about 2020 kind of being that, opening the doors into China and us not having much history to base things off of when it comes to selling corn into China. And China finds themselves in a very precarious situation today. In 2020, one of the reasons why exports boomed was because you had some instability across the population. And I remember COVID had hit there a little earlier. even the Chinese New Year, which is when a lot of the money goes into the economy. A lot of people are still on lockdown. Can't really participate in that. That's kind of a nationwide vacation / holiday. And the situation they've got there was they increased protein production in the country. They find themselves today in a similar situation, not because of COVID, but because of the general economic conditions. Sterling, there's a couple different ways they can go. Do they pick up and increase protein production again, or is this a time where they look to expansion, possibly some action in Taiwan, where it may actually cut those imports from the U.S. Further?
Well, when it comes to the situation with Taiwan, one thing that I do see is Taiwan is a major manufacturer of semiconductors. That's their biggest thing. China and Huawei are increasing Chinese semiconductor production. Huawei is putting out a new smartphone, meaning perhaps they don't really want to risk deep international problems by doing something in Taiwan. Rather, they can pick a fight with Apple. The Chinese government has banned all government employees from bringing Apple products into the workplace. That would be the first step. Could we see them ban all Apple products? That would have a reverberating effect across our financial markets. Apple is the most overowned stock on the planet, and they've actually had 2 or 3 less than great quarters. So if they were to knock out and ban all Apple products in China, that's 20% of the biggest company on Earth's revenue. That might be a much easier way to drive things in invading Taiwan.
I think that you bring up a really good point there. And, but as we spend time as a company in Washington, D.C., and we're not there to talk about geopolitical items and things like that, but you can't help but notice from conversation, a lot of staffers from offices that are involved in agriculture have made trips to Taiwan over the last year. It doesn't seem that in the nation's capital, they take that threat too seriously as far as an all-out invasion of Taiwan. So that's certainly good news for what we're talking about when it comes to the possibility of selling them more corn.
Yeah, and I'm of 2 minds on the Chinese situation. On one hand, they don't want to buy our corn. The second time, they have some serious economic problems. Mm-hmm. How do you keep a population happy? Well, you keep them well fed. And something to watch, if you listen to my podcasts for the livestock, every day I talk about Chinese hog prices. They've come down noticeably over the last 3 or 4 months. That could be a function of bad economics. That could be a function of maybe they're working on amping up production, which would have some knock-on effects, hopefully, in them buying some more corn from us.
Well, Sterling, I always put you on the spot when we got just a couple minutes left. You've got just really just a couple minutes to answer this question. Biggest surprise today is going to come from what number?
Biggest surprise today is going to be the cotton ending stocks number. I think that's going to be lower. We have damaged cotton production. The thing is, Chinese imports of cotton have actually been pretty good. Are we going to see, China maybe pick up some more cotton? That's where I think you have the chance for the biggest surprise. The next one I would think would probably be corn yields. Is the USDA going to be willing to aggressively shave those corn yields down a little bit based on the heat? I don't think they're going to be as willing to get aggressive with soybeans because, frankly, getting soybean yields right is very tricky. That is a tough job. So those would be the 2 biggest surprises. And then here we have about 45 seconds to the report. I'm going to click onto this screen real quick. There's another problem we can talk about. That's crude oil. That is making a new high for the year.
Really interesting. You mentioned cotton, and cotton, while we don't draw necessarily parallels between cotton and corn and soybeans in a lot of cases, you talked about that a lot, how cotton is tied to so much more. It does seem like cotton and wheat have kind of led charges and kind of been market leaders before we saw moves in corn and soybeans. Is that a coincidence, or could we be setting ourselves up for something like that again?
Well, cotton has maybe some potential to improve. The wheat market, however, is having a lot of problems. And here we have our numbers. Ending stocks at 2221. That's basically a little higher than last time around. So that number is a smidge bearish. Yield at 173.8, kind of in the neighborhood there, a little bit higher than expected. Soybean yields 50.1, right in line with the survey. Ending stocks at 220, right where we expect it to be. And we have cotton ending stocks at 3, so we get a bearish surprise there. And cotton production cut a little bit, so they would have had to have trimmed exports for that. And then wheat at 615, right in line with expectations. So we weren't looking for any surprises there, and we got none. So we can sum this up as saying a little bearish corn, probably neutral for soybeans. Soybeans were down sharply this morning in the whole chart. Actually, here, hold on. Let's just put up a chart of this here. Let's go back to this screen. We'll put up a chart of soybeans first, because that is kind of the thing that we kind of need to be concerned about. We need help. As you can see, soybeans have probed lower. This entire chart pattern, you can see that green moving average rolling over, the 5-day moving over, and the stochastics and the RSI both in bearish configurations. So the corn did not get the help it needed from the soybeans today. And looking at corn down a little bit and pressing right against, this 480, we'll call it 475 to 480 has been a pretty good support area.
How have beans reacted, Sterling, without having markets right in front of me at the moment? How have they reacted initially?
Beans were trading down 7 at report time. They're now down 9 to 10. They had been down as much as
17.
17, 18,
Right.
right off the snap of the ball. So that was it's a little heavy. I don't know how seriously they're going to take that bean yield number. That number can still go either way a little bit. So I don't know that the market's going to trade down too aggressively on that. But we are seeing some selling now coming into the corn market. December 477 and a quarter. That is down 8 cents. And we are pressing against that support area. I just threw it at 475. I'm beginning to feel a little bit towards the corn, kind of like how the wheat market has been abusive to my ideas. So we'll see. That's not a good number. And one thing to keep in mind here, we'll go back to the report. They didn't do anything this time around with the export number. That doesn't mean they're not going to in the future. This report doesn't feature a lot of changes to export numbers. That's typically something we see October, November, and in January. And then of late, we've seen that actually hurt the old crop numbers. So it'll be interesting to pull up when we get the whole report and take a look and see what the old crop numbers have done. They may very well have cut old crop exports and added something into the carryout to compensate for the lower yield and the production numbers 1.5. Let's see, we were at 1.511. We actually added a little bit to production.
Yeah.
So how do we cut yields and add to production? Acres were higher. It's the only way you can do that.
It's interesting to me. A couple of things that I find almost humorous in this whole process is, we try to get bean yields down to the 10th of a bushel whenever it's pretty challenging. The second thing is for us not to have a good handle on acres by August 1st. Don't get me wrong, acres is always going to be a minute fluctuation, but for us not to have a good handle on corn and soybean acres by August 1st, I think is almost laughable with the technology we've got out there.
Well, these are harvested acres. So that ball's a little harder to hit. The planted number that we got down, but how much they're actually going to harvest is sometimes another matter. So that's something where you can get a little more variability. You still with me, Brooks?
I'm here. I'm here. Just taking a look at it kind of on my computer and my phone, just kind of perusing over the numbers. It really looks like we could have skipped over this one. It's like the September numbers didn't really give us much insight than we had prior to the report release.
No, there aren't any big surprising things. I'm looking at the global numbers right now. Corn ending stocks a little higher globally. Soybean ending stocks, a repeat of last time around. As far as wheat ending stocks, 259. Numbers are actually globally a little bullish for the wheat. That came in a little bit below expectation. The wheat market is not really finding any support or solace in this, though.
So as we watch that corn number trade, December corn specifically, we're starting to get into a territory where, given average yields or at APH levels, on some of these policies, we're getting close to claim territory. This is not something that has been done for a lot of years, but if we creep lower, Sterling, there may be some opportunities for producers to kind of lock in that low price prior to October. I don't mean selling it necessarily. I mean buying it, and some opportunities for your astute marketers that are out there. Because if we do get low and we see ourselves in that claim territory, there could be a little opportunity there. We haven't seen it for a long time.
There may be some potential. What we're going to need is something to bullish drive the market.
Yeah.
From here, our bullish inputs, exports, obviously, that would be the biggest thing. That needs to improve. The second thing is, do we have trouble planting the crop in Brazil? That is the next thing. I'd like to say we're going to have trouble in Argentina or not have trouble, but it's Argentina, and their relevancy seems to shrink every year.
Yeah.
I mean,
their relevancy in Argentina has largely moved to kind of what I call the third commodity down there, and that's soybean meal, and that is the relevance of Argentina to the world market right now.
Yeah. Here, if we look at Brazilian corn production, old crop production, 137 million tons. Okay, that number is doubled. I'm not going to guess the time frame, but it's doubled. But we look at Argentinian production, 25 last year, 48 this year. 48's been their holding pattern for a decade. So the real question of the corn market is, if they have trouble in Brazil, will it move the needle? Or in Argentina, will it move the needle? But this Brazilian situation is really what's going on. And we look at Brazilian new crop production, they're looking for 163 million tons.
It's pretty amazing. One of the factors that plays into that, I can't help but, I was down in 2001, and I felt like while there was still some ear corn harvest, but there was a tremendous number of combines without cabs in 2001. You saw that still in Brazil. One thing that's changed so much is the technology. Probably is double or triple what we saw from the United States from 1960 to current day. They really caught up, and that technology has allowed to take that same ground using today's hybrids. Even planting and harvesting methods have allowed them to just really catch up on a yield curve that is much steeper than what ours is in the U.S.
Yes, there's no question they've improved technique, and that's something eventually things are going to have to change. I think we're going to see more soybeans grown in the United States. It may not be next year or the year after, but 5 years from now, when we're having this conversation, we're going to be talking about more soybean acres and more soybean production.
I think without a doubt, we may see that trend next year start.
No, it's entirely conceivable. If we can see beans right now hold 1350, and you're looking at corn sub $5 or maybe even dare I say, sub 450, you're definitely gonna have an inclination to plant beans.
Sterling, before we hop off, I did get a text message question here. It's, what in the heck do we do with unsold corn in the next 60 days? And that's a really tough question. And I'll throw some ideas out there. And Sterling, I want you to add to these. But number one, people are going to be tempted to use storage at commercial facilities. I would discourage that. And I think storage costs are going to be pretty high in a lot of cases. And remember, if you're hoping for a good basis later on, you're hoping for exports to really pop up when we may not expect them to. So that's going to be challenging. You've also got operating lines out there that are probably in the, 7% range in some cases. It may be good, and I hate to do this, to turn that corn to cash. If you turn that corn to cash, I would really, really look at some type of reownership strategy, and
Right.
that can take a lot of different faces. When I say reownership strategy, Sterling, what are some of the ways that a farmer can do that?
Well, you want to do it cheaply. You want to maintain lower risk. So what I would do, and yeah, you don't want to be paying 7 and 8% interest. That's no bueno. That is no, 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 no. You can turn it into cash. Make sure you're not leaking interest, because the two things you want to try and contain in life are taxes and interest expense. First two things. What you can do is, I would look at buying like a cheap call spread. Something where you buy something a little bit, say beans are trading, our corn's trading at 450. You buy like a 480 call, you sell, like a 540 call or something above it. So you're owning this corn for a few cents. It works, that's great. If it
I
doesn't
really,
work,
really
it
that's
doesn't
a
cost you much.
conservative approach with not a lot of money out of your pocket. If you wanted to be a little more risky, what is a way that you can re-own that crop?
Well, the other way, if you like throwing the dice, you can sell puts, bring in cash. But the problem, if you do that and the market goes down, that corn will be put to you. And that is not a good thing. The other way is you can buy futures, or you can buy futures and buy a married put to it. That will tend to be a little bit more expensive. You may get a better performance if the market bounces. If it doesn't, it can turn into a sandbag in a hurry.
So Sterling, something I was talking to one of the larger commercials in the U.S. commercial grain elevators, and they're seeing a record number of basis contracts that have been written in the lower Mississippi and lower Ohio as harvest starts there. A basis contract is a challenging thing to maintain in a carry market. Why is that exactly?
Well, I am not the genius on basis contracts. So,
Well, one thing that I kind of learned right off the bat in the grain businesses is it's a challenge to maintain a basis contract long term in a carry market, because each time you roll that basis, when you have to roll that basis from December futures on corn to March, that basis is going to be lowered by that spread, which is around 15 cents right now.
oof,
And you can get 70% advance on it. That is an option. Okay, so you are getting some money, but you have to be careful that if that market does trend lower, there is always a chance you have to maintain that. A lot of commercials make you maintain a 90% level on that. So there's some challenges with basis contracts. That seems to be the marketing tool of choice. I think it's okay, Sterling, for a short-term hold. And what I mean by that is, most of those, if you do a corn basis contract, you've got until around Thanksgiving to price or roll that. I think by Thanksgiving, you probably ought to have a different strategy in mind other than just waiting. In other words, that's when you go to your bull call spreads. That's when you may just, you may sell it and buy the board. You can get creative at that point in time.
yeah, I would agree with that. We are going to be struggling to find some bullish inputs here. Corn right now is breaking through some technical areas. and that is, um, that's going to be a problem. The funds are short. It's not a burdensome position, but clearly they're willing to add to it right now. I noticed that we had a question about, are the funds being short wheat a bullish thing? No, it is not. They have a capacity to be short. They love being short Chicago wheat against everything else. It is very hard to try and be a bull in wheat. I thought we might have been able to find some support here in the Chicago wheat around $6. We managed to bounce to 6.15. We are now trading 5.80 and a quarter. So the funds have no problem in here selling it. I think we have plenty of harvest pressure coming in from both the spring wheat and the leftover winter wheat harvest. So there's enough pressure around. It's really hard to find a bullish case. We also have, some situations with the dollar and things like that that are going to affect exports, and we're going to have a bunch of information tomorrow, Thursday, and Friday about inflation. And that is going to affect interest rates, and that is going to affect the dollar. The dollar has had a rip-roaring rally since July. We're coming right into some resistance areas. And where we see that 10%, that 10-year note rate by the end of the week, it's going to say a lot about where the dollar's going. And if the dollar continues to strengthen, that's going to be a weight on exports.
Yeah. Well, Sterling, if you can tell by the intercom in the back, I'm in the airport once again, and I'm going to sign off. If you can wrap us up, that would be great, and take any questions that might flow through.
Yeah, I have one quick question for you, Brooks. How
Yes.
are river levels looking?
River levels are not good on the Mississippi, and this rain that came through, there was some hope that maybe we would restore those. They are only slightly above where they were at a year ago. If you couple that, which what that does is it increases the barge freight. So the cost of transportation is increased. If you couple that with the lack of demand in the Gulf, we are probably going to have some tough weeks in October, I believe, where basis could get really, really poor. I think it's going to be short-lived. I think it'll pop back up, but unfortunately, that's when the lines at the elevator are the longest. There has been a little bit of a pop in Mississippi and Ohio basis levels for October. Highly encourage you, if you've got bushels that need to go to town in that geography, get a little bit of this locked in. Again, they're going to improve relatively quickly, but I think there could be a 14-day period where they're pretty rough.
So there we are. And needless to say, when you raise cost of moving, that hurts exports.
Everybody have a great week. I'm going to hop off, and we will see you at the marketing meeting coming up here, Sterling, next Thursday?
Third Thursday. Anything can happen.
Yeah.
Thursday is next
That's
week.
Right. All right. Talk to y'all later.
And let's take one quick look at the markets here. As we can see, corn is down 10 cents, the low for the day. And we are sitting right about at the lows, 475 and a half. So we're pressing on the lows. November beans at 13.51 and 3/4, down 17 and a quarter now. We are back pressing the, we're not back to the lows that we made at the flash of the report. We're back to where we were trading prior to the report and seeming to see some selling pressure going on. Wheat is under a little bit of pressure here. We are down about 3 cents. Cotton is bouncing a little bit on the report, so concerns about the production numbers are not obviously as acute as what we thought. Other items, crude oil at 89 bucks a barrel. That's not good news. Diesel is backing off a little bit today. It's been zigging and zagging with the crude oil, but the general trend is higher. Unleaded is up about $1. Stocks are a little bit lower, but they're off the worst levels of the day, but we are coming into the noon balloon period. And interest rates are fairly quiet in front of the big inflation numbers. I'd like to remind everyone, listen to the podcasts. Covers everything that goes on from stem to stern twice a day. Make sure over the next 3 days to pay close attention to the DMOs. Because once we get past this WASDE, we have a whole bunch of things that are going to affect the value of the dollar, going to affect interest rates on your operating lines, and everything else. So it's going to be a very busy week. Did we have any other questions? Ashley, did we have any questions?
No, that's the only two questions that I see out there.
Well, in that case, I'd like to wish everybody a good day and make sure to read this afternoon's report as we'll take a look and see what this did to the charts and exactly where we are with these balance sheets.